So that is the loan estimate that we discussed yesterday, right? That once borrower sign this application within 3 days, it's lender responsibility to send the disclosure, means loan estimate, which will give us all the information about the fees that lender is going to charge to process this loan, to underwrite this loan, to close this loan. Whatever the fees lender is going to charge, right? Those fees will be written in this loan estimate. Like yesterday, I quoted one example that if I take my car to the service station, what happens? They give in as soon as I hand over my car to them, they are going to give me a paper. On that paper, they are going to give me an estimate. It is not going to be 100% correct, but they will say it could be 10%, 10% above or below, whatever the estimate they are going to give us, unless there is any serious issue which they find later during the servicing, they will let us know, or they might give us an updated estimate at that time. But initially, they are going to give us an estimate. We rely on that. Okay, it's good. If we find that they are charging so high, we deny a request. We ask them, okay, no, I'm taking my car out. I will go somewhere else who are going to charge me less amount, right? So similar way, loan estimate will be given to the borrower by the lender within 3 days, and it is a federal rule. No one can, breach this rule. If anyone is going to breach, there are going to be heavy consequences. So lender will never, try to breach even. If somehow if they breach, then they will stop this application and will take a new application and will start, entire loan from the scratch. So nobody want to take this risk because it's a federal rule, right? Okay, so that is what the loan estimate. Now, once loan estimate received by borrower, what will happen next? He will go through the loan estimate, or she will go through the loan estimate, and after going through the loan estimate, what borrower is going to do? They are going to give a signed, they are going to sign different documents, and they are going to tell us to the lender that yes, his or her intention is good to proceed. So that is called ITP. ITP is intent to proceed. That is the disclosure name. Intent to proceed means this intent to proceed document should be there. Who will give this ITP to borrower? So what happens? How borrower is going to receive this ITP? So what I'm trying to tell that when we are as a lender, when we are going to send loan estimate to borrower, right? LE, in short, it is called LE. When we are supposed to send LE to the borrower, that time, we are going to send him all the applicable disclosures. Most of the disclosure will be sent to him because we are sending estimate. So why only to send estimate only? What we do? We send all the applicable disclosure, federal and state disclosure, right, to the borrower. Now, how we can send, from where we will get? Very easy. Each one of you already working in different places, different company, you will be utilizing a system, right? System. Whether you are working in servicing, whether you are working in origination, in closing, in underwriting, or any other, department, you will have a software, a computer, and in that computer there will be a software. That software I'm talking about. For origination, it is called LOS. That stands for Loan Origination System. There could be LSS, Loan Servicing System. So there could be different softwares, right? So in underwriting for mortgage, we used to call it LOS, means Loan Origination System or Loan Operating System, whatever seems or sounds convenient to you, you can call it. But most of the people know it as Loan Origination System, right? Now, what is this loan origination system? It's the software and application where we can enter the data, where we can capture the data. In 2000 or before 2000, how we were doing the underwriting? We were getting all documents on the hard paper, and then we were opening our notepad and were doing, writing everything on our paper that, okay, this is income, this is borrower name, this is everything. And then we were doing all the calculation and approving the loan. Then software came. Instead of writing with a hand and creating different ledgers, different files, we started with all these softwares. And instead of using those notepads or those files, those copies, those hard papers, now we started on the softwares, right? Soft copies means these LOS. So everything we used to capture in this LOS. It's a simple application, right? You must have heard lending pad. You must have heard Encompass, Black Knight. There are thousands of software available to capture all this information, right? We are going to discuss more about it later. But in these LOS, these have, all the disclosures, those are already integrated. Means the copies already written, already improved, or we can say already prepared inside this software. So whatever the disclosure I require, right, I will go to the copy and I can print those disclosures in PDFs. You can take a printout as well. If you wanted to go and hand over these disclosures by hand, you can take printout as well. But as of now, what is the most convenient thing? We can print those documents in PDFs, right? We can print this loan estimate and we can send it through email as a soft copy to borrower. What is the best benefit? These pages are automated, right? It is already there in the system. So what happens as soon as application comes, all the application information we are going to add into the LOS system, in the loan origination system. So once I create that loan or that information, I'm going to add borrower name, SSN, right? His score, or whatever the information, initial information I need to create, I can create it, right? Once I create that information, then I can print, because I'm going to put there the subject property address. If subject property address is not available, then at least borrower what state he is living, right? So by getting this system is going to recognize what state borrower is living, what is borrower first name, last name, SSN number, and it is going, as soon as I'm going to print those disclosures, borrower name, property address, state, right? What state disclosures are going to be applied on that loan, all those will be automatically, a bunch of documents will be automatically printed, and we can attach those disclosures with this loan estimate, and we send it to the borrower. Once borrower receive that bunch of document, then once he is okay, yes, I'm good with this loan estimate, let's proceed, we will ask him to sign all the document. He can sign it electronically as well. Previously they were taking printout, they were signing it, again they were scanning and sending back to us. Now there is you must have heard about Docu, or there is a different applications where you can just put your sign and then you can print it anywhere, right? DocuSign is one software, or there are many others as well, right? So anyone can sign those documents electronically. Sometimes they send their signatures to the loan officer, or sometimes loan officer will tell you go to this application and there you can sign all the documents. Just sign once, and that is going to update the signatures and date on every document. Borrower need not to sign to go particular document. They just need to sign, provide their signature on the DocuSign, and that software itself is going to sign all the documents. However, that is not our topic to discuss, but just for a general information, how everything happens, I'm sharing with you. Once those documents will be signed, right, borrower will definitely send those documents either through email or whatever the manners he wanted to use to share it back with lender. Those will be sent back to loan officer mainly, right? Loan officer or email if they have provided. So once those document comes in, then the next procedure starts. That is something we are going to discuss later. But before that, what I wanted to tell you. So this disclosure is done, right? What happens in the disclosure? We print LE, loan estimate, we create it and we share it along with other disclosure and send a copy to borrower. Then borrower sometimes, just sign ITP one or two document, or sometimes he tell, okay, I will sign it. Don't worry, you proceed with, I will send you documents within 2-3 days after signature, right? But you can carry on with my own processing. Please approve it as soon as possible, right? So that is how this disclosure things takes place. Remember, these are initial document. I told you first time document. So all these documents are called initial document, right? What happens once once loan officer convince borrower, then borrower give all the information verbally or verbal information on a loan application. In the loan application, right? We will discuss loan application later, word by word, don't worry. But as of now, we are just taking an overview. So loan application is all the information given to borrower, right? Sorry, all the information given by borrower, excuse me, all the information given by borrower on the loan application, but we didn't get any document. Whatever the information he told us or he provided on the loan application, we accepted it, right? Then we gave him the LE, right? Loan estimate. We gave the loan estimate. Now, when we gave the loan estimate, who is responsible to give this loan estimate to borrower? Loan officer or processor? Anyone if worked in the disclosure? Okay.
Processor, sir.
Okay. So what happens now? Listen very carefully. Okay. Let's say there is a lender. Lender name is Indigenous Outlook. I used to receive almost 10 loans in a month. How many customer? Means loan means customer. On an average, I fund or I complete 10 loans in a month. 10 loans. Now, to review these 10 loans, what should be the staff I should have? Maybe 1 or 10 loans means one underwriter is enough to underwrite these loans, right? One processor can set up loan and do different things. One setup or pre-underwriter we can say, or processor we can say. One person can take care of all the closing part, right? So I will have 3 team members in my team to complete this end-to-end file. Or I can say 1 or 2 loan officers, right? Is that fine? Is that good? I mean, that much staff I require, right? But let's say then what should I give if my one setup member or processor goes on leave? There is only one file. I will say to my underwriter, okay, set up kar lo na. Just set up this loan. You can do it, right? So underwriter can also set up the loan. Or sometimes if closer goes on leave, my setup member, I can shift him, okay, do the closing work now. Or I can cross train them and they can take care of those, right? That can happen, right? So there is no such roles, those are defined who is going to do what. Because of there are only 2-3 members, everyone should do everything, right? Even I can give, okay, don't send these LEs to us. We can train our loan officer. We can tell, okay, get the application signed, right? Use this software, this LOS, put all the information there and send the LE to borrower, right? So even loan officer can do it. So there is no such role defined who is doing what. But let's say on the other hand, there is another lender who used to receive 100 file in a month. Do you think these 3 team members is going to, or any staff is going to handle all 100 loans all in all? Not possible, right? What need to be done? Process need to be break out, right? The entire work need to be break out in different sections. So maybe we will say, loan officer, you go and only find customer. Don't do you need not to do anything. He might say, no, I was working previously in Indigenous Outlook and I was even disclosing loans. As a lender, I'm going to tell there are 100 files going to. You cannot disclose 100 files. So remain, bring more customers, make it 150, but don't Don't be worried about. Just get the application signed and sent to us. We will do everything. So what I'm going to do, I will set up a disclosure desk. Make sense? Then I'm going to set up a disclosure desk. Then I will say, this is your responsibility to disclose the loan within 3 days as soon as you receive the application. Then after disclosure, I will set up the setup team that, okay, once you receive the document, you are going to set up the loan in this way. Then you are going to move file to underwriting, and then underwriting will move file to closing, and then closing will move to the funding, right? And then they will move to the shipping. Is that how it happens or not? It happened that way, right?
Right,
All the
sir. It
process,
happens.
the entire process will be broke down in a small pieces, and there will be different people who will be responsible for the different parts. But similar way, if you used to work for a small lender, you might have to work from the scratch till the end. You will say, Sudesh was telling, disclosure need to be done by disclosure desk. Why I'm doing disclosure? I'm not working in the disclosure, right? So there is no such a defined way where I can say, no, this is how the process, so process will remain same. No, there is a possibility that, 100 files. So they might say, people are less, only 10 or 20 people in the team. So they might say, okay, you will do the LE, then you will do the setup. And then once loan is approved, you will do the closing work as well, or shipping work as well. But you would say, no, no, I am the expert in disclosure, but I do not know what is shipping, what need to be done there. Obviously, your lender is going to train you, but you know, and you might say, so this was telling disclosure desk, or no, this is only specific to this, these people are going to do this thing. But here lender is telling, no, no. So in one client, you might work on the with the same name. Now it's my business. I wanted to call my loan officers as loan agent. You will say, no, no, those are loan officers. They will say, no, these are loan agent, right? Loan agent. So it's a personal business, right? Anyone can name any process with their name. Some people say it's a loan setup process. Some people say it's a pre-underwriting. Some people say it's a processing. Some people say it's a loan submission. Some people say underwriting submission. So it's different, people to people, company to company, lender to lender. The work is going to remain same, documents are going to remain same. It's the only name, those might get different. So we need to focus on the work instead of name, whatever the name. Now there is a possibility, I told you that less number of staff, less business. So there could be the more steps that we need to complete in the loan setup. Where we have lot of volume, there could be a possibility the steps got reduced, and those are further broke down and given to different people. So don't be very specific with the process. You need to get the what is the work that is being done at different stages. Make sense or not?
Yes, sir.
Okay,
Right, sir.
many people get confused. Okay, they think that processing is same at everywhere. No, it could be up and down. It depends on the how much volume you have and what your lender wanted you to complete, right? Okay, so what happens actually? Now I'm going to tell you the process. Now it could be different at different lenders office, right? Or if it's a retail channel, wholesale channel, it is going to be different to different. What I wanted to share with you, there is a term that is called AE. AE means account executive. Account executive. Who is account executive? Account executives are the people or the employees, right? Who are also called account managers, BAs, business analyst, right? So account manager, business analyst, those are all. Let's say I'm the loan officer. Listen very carefully. I'm the loan officer. I convinced a customer and got his permission to file the application on his behalf in my bank. So where I will take that application and whom I need to send that application. There should be someone, right? There should be someone who will entertain my application. Whatever the business I'm bringing from outside, it should get entertained by someone. So it is who the person account executive. Because what happened? Loan officers or brokers, they are not people who used to work inside the lender's office. They used to work in the field, right? So once they, whatever they get outside, they need to submit in the office, but in the lender's office, they need to send it to someone, hand over to someone. Who is that person? That person is a account executive. So whatever the business as a loan officer I get outside, I will send it through email, or I personally go to office and hand over it to someone, right? So those are like, these people looks like, receptionist, account executive, account manager. So who is my account manager? I will go to him or to go to her and will submit my application, whatever the information I need to submit, right? These are the account managers. We can call them as a boss to the loan officer or broker. Obviously, brokers are on commission based. These AEs main work is to find the best loan officers, to find the best brokers, deal with them, negotiate for their commission, negotiate for their salaries. Plus, it is also because if I'm going to work as a loan officer for Citibank and then I switch to the ICICI Bank, obviously I won't be knowing anything about ICICI Bank products, what need to be sold. So I also need training. These account executives are going to train me, going to hire me, going to check all my documentation, everything. So those are, you can say managers. They will, my training is account executive responsibility. All my documentation, licensing need to be checked by account executive. Whatever the business I find outside, it will be given to these aides, these account executives, as a broker or loan officer, because those are my reporting managers. Is that clear? Who is a account executive? Used to work inside the office. They do not go to field. It's broker and loan officer who find business outside. Account executive used to work inside the office. Loan officer and broker, they report to account executive and submit all the work, whatever the business they find outside. Right?
So Sudesh, the account executive is always part of the lender's company, right? They're never,
Yes.
never, yeah, they're never brokers.
No. They can be broker, but if someone is working as an account, I mean, see, anyone who is going to find business, obviously, as a broker, they need to, it's not that any lender can go to, sorry, any broker can go to any lender and submit their work. No, it's a long procedure. First, broker need to get approved with them. They need to submit their license. They need to tell, and company is going to search their history, going to see their credit line, how is their character, everything will be checked. And then their information will be saved in the the repository, in the this lenders repository. They are going to save everything. Then someone from the higher authority, they are going to approve it. Okay, this broker is approved to do business with us. Then only we are going to accept application from those broker. It is not that anyone can come and submit the application. That is not going to happen. It is only the approved broker who can submit their business with the account executive. So if any account executive could have NMLS, but it is not mandatory. If they want to do business, they have to go through a indirect method. They can give their application to someone else, broker, and broker can submit those applications with their name. But account executive, they could have NMLS, that will be good for them, right? But yes, they cannot work as a broker also with the same lender.
Yeah, understood.
Right? Just give me one. Excuse me. Okay, so those are account executives. Now, account executives receive a business from the loan officer. What they need to do? The first thing, they need to do the LOS. Now, again, I am telling, it is a generic procedure that I am telling. Whatever I am telling, it could be different lender to lender, company to company based on the volume. That is why I already clarified you that don't stick to that. This is how it's going to happen, that all these loans will be created by AE. No, it's not mandatory. If AE will have some processor, we can use them, right? Okay, here is the documentation create. Or if there is only 3 team members, so why AE will send it to someone else the document? Okay, we received a new application, create a loan. AE himself, or even they can give this information to loan officer that you can create a loan. Don't wait for us. Create a loan in the LOS, right? So let's say we are using Encompass. That is the loan application, right? LOS. As a AE, I received a loan application, right? So I opened the loan application and here is my system, Encompass. I just hit the button new loan, right? New loan, and a new blank application opened on my screen. I'm going to enter all the details. That is mandatory minimum detail. That could be borrower name, SSN number, address, right? Property address, what purchase or refinance, what type of loan, how much loan amount, whatever the information I have, I will enter it and will save. Hit the save button. As soon as I hit the save button, a new loan will be created in this system. New loan could be 1, 2, whatever the sequence, next sequence, right? Next could be 7, next could be 8. But this is now the unique number, because if let's say the borrower name is borrower, there could be 100 borrower. We cannot find which borrower we are looking for, right? So best is it's a unique identification, that is the loan number will be given to every application, every loan application. Now we have loan number, we have this application, right? Loan application. So where I'm going to put this loan application, obviously there will be a link. Let's say it's E folder, electronic document folder. I will click on this electronic folder and there will be an upload button. I will click on upload, and like you attach document in your WhatsApp, similarly you can, either you can drag and drop in this folder, this document, or you can upload through the way, right? Going through the descriptions, going through the path, and then you can upload here. Once you upload, this document will become available here in this loan. Next time you just go to your Encompass or your LOS, write this loan number in the search field, and this loan number will open. That everyone know that is how it happened, right? But you will also have the document. Now these documents could be indexed, means categorized. So you have loan application in this folder. You can make different folder with name, so that you do not have to scribble through different documents. You can segregate those documents. This is application. All application will be in this folder. Income documents will be put in this folder, or asset document will be put in. So that is how there could be 100 or more than 100 folders inside, where you can segregate, categorize those documents. All income document in one place, all applications will be in place in one folder, right? With tagging name, so you don't have to scribble with the date, right? That is also called indexing or document categorization. Now, most of this part is automated, right? Means as soon as loan officer or anyone who received the document are going to upload the document here, they will dump all the documents in one place, in one folder, and then they will hit the button categorize, and system itself is going to recognize document and going to categorize, means going to put them in a sequence in a different folder. Then you can check the quality, whether all the documents are properly categorized, because it's a system. Those are documents. If any document comes with a different name or different format, sometimes system does not recognize them, and then system can put them in trash, it can put in the recycle bin, or it can put in miscellaneous, or maybe it was related to asset and it was put in the income document, right? So that is what called the document indexing or quality audit of document categorization. That is how it happens. It's the basic funda. This is how the loan gets generated, gets created, in the system. The next thing, very important. What I told you, AOM, remember? Assignment of mortgage.
Yes, sir.
Assignment of mortgage. Assignment of mortgage document was in which this document tells that this mortgage have been assigned to someone else, some other investors. Means whoever the investor going to purchase the file from lender and going to pay the lender accordingly, right? He or she, that company will become now the real owner of that file, right? So who are these investors? We used to call them investors who are going to put, investors going to invest money, because in reality they are investing the money. So when let's say I'm the lender, okay, I'm going to sell the file to one investor. So when investor is going to buy this file, right, what he's going to check, all the rules and regulations properly cleared or matched or fulfilled or not. That is what this investor is going to check. No investor is going to purchase a file without checking, right? If you are going to purchase anything, you will see, from all around, is the product is good. Even if you go for lunch or dinner, you 4 times you will see here and there is everyone is enjoying the food or not, right? That then only you order. If you buy even a small glass, you are going to see up, down, right, left, right, everywhere. Is this good? So here investors are investing or purchasing something. It could be 1 million file, it could be 500,000 loan, 200,000 loan, which is very expensive, right? So they are also going to check the entire file, with all their curiousness that all the conditions are met, fulfilled, right? So if this lender knows I am going to sell file to this investor, right, he going to ask for the what document or what are your guidelines. Because as I told, right, I cannot take the file and go to the market, file le lo, cannot do that. I told yesterday, first, as a lender, I will find investor for me and then I'm going to lend. So when I find investor is going to give me their guideline, investor's guideline. According to these guidelines, I'm going to fund the loan. I'm going to approve the loan. Once I approve the loan, then I'm going to send that file to investor. Check, I met all your guidelines. Now purchase the file. Is that clear? Right? So there could be two different set of guidelines. One is your lender guideline. One is your investor guideline. Right? Lender guidelines could be overlays to the investor guideline. Investor telling 2 years of employment history need to be in the file. 2 years of employment history means previous 2 years, there all the income documents, tax returns, W2s or whatever documents need to be provided. But I need to prove that my last 2 years income history, how much I earned in 2021, how much I earned in 2022 with proof of document. That is what investors guideline. Now lender might say no, let's do it for 3 years. So we will match this investor's condition, but we will take it 3 years because there is another investor as well. If this investor will give us less margin, we can sell this file to this one as well. So he can overlay. So there are mostly you will find two set of guidelines. One is for the investors, one is for lender. Is that clear? What are guidelines and why we need to follow it? Yes, no?
Yes, got it.
Yes, sir.
Right? Okay. Any question related to guidelines? No question?
So Sudesh, I'm thinking of two scenarios. Let me know if both are practical. One is lender actually does the funding also, and then he sells the files to investor. That is one situation.
Right.
Second is he does all the checks and everything, and then he gives the file to investor for the purpose of funding.
No, that is not going to be possible, right? That is not
Ah.
going to be possible. Yep. Because no lender, investors are not going to purchase one file. They will get a pool of files.
Okay.
Like, yeah, in the entire month, I might fund 3 files or 4 files, right?
Mhm.
So some investor tells, okay, whatever the files you are going to fund, send it to us. And it is not like, mostly what happens, there will be a credit line that will be given by investor to the lender. Okay, you can fund from this credit line. It's like a credit card. I'm
Okay.
giving you credit card for 100,000, right? So that
Mhm.
means if you sell more than 100,000, I will only purchase these files for 100,000. Purchase means I have already given you a line of credit. You
Mhm.
take amount out of there and fund those loans, right? Then
Okay.
send these files to investors. So there are
Okay.
different ways. Some investors might not have given any credit line. Lender might have so much money. They will say, okay, no, we will fund our own. We don't require any credit line, right? But
Mhm.
when we sell it, then only we will get paid, right?
Understood. Understood.
Yeah. So there are different ways in the secondary market. Okay. So now the 2 years of employment, lender, investors, right? Or different guidelines that we need to follow as an underwriter. First, we need to match all the lenders guidelines, and then if we get to know which investor we are doing this file or we are approving this file, we will also meet those guidelines. Now, who are the investors? There are more than 1,000, or maybe we can say 10,000. But since investors keep changing their profile, so let's go with 1,000 plus investors in the US who invest only in this mortgage market. 1,000 plus. More plus, I'm saying plus, I do not have a real data. It goes up and down very frequently, right? But 1,000 plus. Out of these 1,000 plus investors, there are 2 investors who are, or we can say boss of this market. Boss of this market. Those are called GSEs. GSE means government sponsored enterprises. These are also called regulators who dominate the entire market, entire mortgage market, real estate market, especially real estate market. Those are called, the first is Fannie Mae, and second is Freddie Mac. Now, I cannot say which one is the number one, which is the number two. That is fine, right? According to business, they goes up and down. We need not to care for that. But these are the 2 boss in the real estate market. Big investors. Those were previously like small investors, but slowly and steadily, they reach at this point. They are called government-sponsored enterprises, GSEs, right? If anyone follow all the GSE guidelines, so they are telling Fannie or Freddie guidelines. Why they are called GSE? Because they are sponsored by government. Like in whatever the state you are currently living, there is going to be a government transport department, right? Like in Delhi, you must have seen DTC, Delhi Transport Corporation. In Haryana, you will see Haryana Transport Corporation. In Bangalore, you will see Karnataka Transport Corporation. In Mumbai, you will see BSC or something, right? Mumbai, Mahanagar, something. But those are what we used to call, those are government buses. There are private buses as well. Private taxis, private scooters, Ola, Uber, everything. But there is one segment or one department that we used to say those are government buses. But actually, they are not government buses. Why? Because it's a corporation. Those are the corporation, but those are backed by government. You make your whatever the government that transport. Have you heard about Haryana government or Delhi government bus? No, Delhi corporation. So there is a corporation that has been built Now that corporation is going to make all the route for all the buses, which one bus will go at what place, even for the private buses, right? They need to take their responsibility, they need to follow their guidelines. But we used to call them government. So what they are sponsored by government. Government is telling, make the rules, rule this segment or rule this department. If ever happens something wrong, then government is going to stand behind you. Then government will see whatever need to be done. Is that correct? I mean, is that understood or clear to everyone? What do we mean by government sponsored enterprises? Means government is sponsoring them. They are standing behind them. Who is making the rules and regulations? Fannie Mae and Freddie Mac. They are dominating investor. All the investor, whoever going to purchase the right, they can reach at the end point and sell their files to Fannie and Freddie. Okay. Now where we are moving. So there are other investors as well. I told you 1,000 investors, but who are government sponsored? Freddie and Fannie. There is another that is called Ginnie, right? It's also GSEs, but it is only for government loans. It only goes for government loans. These do government loan, these do private loan, all type of Fannie and Freddie. They sponsor, they invest in private loan as well. But Ginnie only invest in the government loans. Okay. So, but the main, when it comes to the dominating world, that is Fannie and Freddie. Fannie Mae, Freddie Mac, right? Fannie Mae short form is FNMA. FNMA, and Freddie Mac is FHLMC. Fannie Mae and FHLMC means Freddie Mac, right? Fannie Mae and Freddie Mac. Now you guys need to get the full form of these two. What is the full form of Federal National Mortgage Association, right? Federal Housing Loan, right? Mortgage Corporation. Is it correct or not? That you need to tell me. Whenever you get time, go through do some Googling. I'm not going to tell everything, right? So you need to get both full form of FNMA and FHLMC. Maybe today or tomorrow you will get a link, right? On the WhatsApp, you need to appear for a very basic initial assessment, right? There, such questions are going to be. So it's better you prepare, right? What you need to do, it will be an online test, right? You just click on it, appear for, there are going to be 8-10 questions. Just simply, those are going to be objective, nothing need to be written. It will take only 2 minutes, right? Not more than 2-3 minutes, only 8 or 10 or maybe 12 questions. Just objective, right? I mean, read question properly. Question should be read, twice, then answer. It could be confusing, but answer you must be knowing if you have heard properly everything that we discussed so far. Okay, so Fannie Mae and Freddie Mac. Now, what these Fannie and Freddie Mac do? Fannie and Freddie tells whoever approved, obviously approved lender, whoever the approved lender will follow our guideline, right? We will purchase those loans. Means whoever going to fund, whoever going to approve their loans, confirming all the guidelines, means all the guidelines should be confirmed by the lender. All should be met, should be fulfilled. Fannie tells anyone who is going to follow my guidelines and going to fund the loan, I will purchase that loan. Freddie Mac also say anyone, both are different. They don't have, any relation with each other. Freddie Mac tells anyone who will follow my guidelines and will fund the loan, will approve the loan, I will purchase those loans. Right? So what happens? Let's say I'm a correspondent. I told you yesterday, that broker becomes the correspondent lender. Means they will get a credit line from some bigger lender who will have lending license, and in their name I will do everything for that lender and will send file to fund them. Or sometimes lender, they become so trustworthy, they tells, okay, here is your credit card, whenever you need to fund a loan, fund on your own and give money from this card or this line. We will discuss later what are the credit lines, right? So that is a different business, but loan will be funded on the name of that lender. So it means that lender can sell the file to the Fannie. All the lenders may or may not be approved by Fannie. But if anyone wanted to sell their loan to Fannie, they need to sell their loan to someone who already approved with Fannie. So that is how this business runs, right? Let's say I am the lender, but I'm not approved with Fannie. I can only do the Freddie Mac loan because I got license from the Freddie Mac. I have been, my lending has been approved by Freddie Mac. So I can only give. So any loan which fulfills Fannie guidelines and I wanted to sell it to Fannie, what I will do, I will sell it to someone else who has the license for Fannie, and then they will sell it to Fannie. They will also make money, right? Let's not get into that. That is a different sale. So Fannie and Freddie both are telling meet their guideline and they will purchase their loan. The only issue is Fannie guideline, underwriting guideline only for single. There are different property, right? So single family residence, there is a guidelines of 1200 pages. How many pages? 1200 pages. And Freddie Mac more than that. They have 1700 pages guidelines. Who is going to remember? If I'm going to underwrite files according to Fannie and Freddie and I have to go through these 1200 pages each time, this file will not get reviewed or will not get approved for 1 year, right? Neither I can remember all these 1200 or 1700 pages to underwrite a loan. Very tough task. So what they did, they added all their guidelines to the system, into the system, right? Both have created their own system and they added all their guidelines there for every product, for each type of property, right? Now, instead of going and reading all the guidelines manually, what I can do here in my LOS, I created all my loan data in this LOS, right? What I need to do, I will send all this data to this system, and this system can scrutinize all my data based on these guidelines. And it can tell how many guidelines that met and how many guidelines those are not met. So automatically everything is going to happen. I need not to go through 1200 or 700 pages. All the data I just need to punch in this system. This system for the Fannie, they have created a system that is called DU, means desktop underwriter. It's a system only, software application, right? And Freddie Mac has created LP. Now it is called LPA, Loan Product Advisor. Loan Product Advisor. These are the two different systems. Freddie Mac has their own system. It is called AUS, Automated Underwriting System. AUS. Now, which AUS? DU or LP? If loan we are going to approve according to Freddie Mac, I need to run all the data through LPS, Loan Product Advisor. If I wanted to run AUS for Fannie, I will run the DU. Is it clear what is AUS, what is DU, what is LPA or LP, what is Fannie and what is Freddie?
Sir, I have a question on AUS.
Yes.
So, sir, I understood that FNMEA, for the FNMEA, we run DU, and FHLMC, we run LPA. But when we run AUS,
Sorry, what?
when we require AUS,
AUS is the name. It's a system, automated
Alright.
system.
all right,
So,
sir. So all the guideline is uploaded in the AUS. But
right.
if the loan is getting approved through Fannie Mae, then we run DU, right, sir?
Yes, DU,
And
I mean, running a system on an application, we used to call it AUS.
okay,
That system itself is calling AUS, like AI. What is the meaning of AI?
artificial intelligence.
Artificial intelligence. That is how this is based on the artificial intelligence. AUS, automated underwriting system. It is called, that application is called automated underwriting system. Now I purchased that automated underwriting software for myself. I won't say it's a DU or LP, right? I'm going to put my
Okay.
guideline into that system. So it will become indigenous outlook system, right? You are going
Yes,
to
sir.
say, I ran AUS findings for it. AUS means, see, there are two different type of underwritings. One is automated, where we didn't do anything. We supplied all the data to the system, and system automatically did everything and gave us the findings. What gave? Findings that, okay, this is what the DTI, this is what this loan is approved or not, or these documents need to be applied or need to be obtained from the borrower. Automatically, I just clicked on the button, run automated underwriting. It ran and gave me the report. I was just watching, I was just waiting. The next thing is manual underwriting. Manual underwriting, where I open the Excel worksheet, right, and go through document by document, note down everything, do everything, all the calculations manually, and then I approve the loan. Did you get what is the difference? What is automated? Automated means system generated. And manual means a person manually doing everything, not running anywhere, not running any data on any system. Did you get the difference? What is automated and manual?
Yes, sir.
Right? So when I say AUS, how many AUS are there? AUS means DU, that is for the Fannie Mae AUS. LPA, that AUS belongs to Freddie Mac, right? That belongs to Freddie Mac. There is GUS. GUS belongs to Jenny Mee. And there is one more Cloud, right? So there are so many. And let's say there could be another big investor who don't want to lend loan according to Fannie or Freddie Mac. They say, no, go through our guideline and we will purchase your loan, like Bank of America, like Wells Fargo, Chase, JP Morgan, right? There are big investors. Lone Stars, Caliber Home Loan, these are big investors. They could have their own automated underwriting system. That now what is happening? Automated underwriting or even processing is happening automated. Like I told you, just we need to lumped all the document, need to put it on a folder, and system itself going to categorize all the document. In the similar way, this automated underwriting is same. We just need to supply all the data, and system itself can recognize all the data, scrutinize it according to the guideline, and can tell us the findings, whether loan is approved or not. That is what called AUS. That system which scrutinize the data, that application software is called automated underwriting. Right? Now, Fannie Mae automated underwriting means DU, means they have given the name to that system as DU. And Freddie Mac has given name LP. Any confusion, any question to anyone regarding these AUS? When I say AUS finding, I do not know which investor this AUS finding belongs to. When I open, then I say, okay, ये कौन सा AUS का finding है? ये तो DU का है, Fannie Mae का loan है. Then if I say, give me the AUS finding, you will search for AUS, not AUS finding. You will search for the DU or LP finding. Whatever the finding you get, you will send it to me. Here are AUS findings, right? Right? If I tell you, give me AUS findings of your loan. So you get the LP findings, you will send, these are the AUS findings. Then I say, you didn't, why you send me LP findings? Send me DU findings. Then you will say, so then specifically tell them which AUS findings you require from me. You need DU ka AUS finding or you need LP ka AUS finding, because all findings are AUS finding, automated underwriting findings. Now you get the clarity? Okay, good. So these are the automated underwriting system, DU or LP. Now, again, going back to 2000, when in 2000, let's say 2003-4, right? How we were running? We were punching all the data in the LOS. Borrower name, SSN number, date of birth, everything, credit, how many liabilities, what is income, everything, almost 10, 12 pages, we were punching all the data. Then what we were doing? We were going to these LP or DU are actually website, right? So we were going to those website. I was opening the DU website. You can even, see this today. Desktop underwriter. Desktop underwriter Fannie Mae. Just click on this. Right? And then if you will have login, you can log in here and you will get the application. Right? See, username, password, sign in, and you will get in this engine. It's an automated engine, Fannie Mae ka engine. In the similar way, you can open the loan product advisor. Right? Loan product advisor, Freddie Mac single family. Loan product advisor give you access the Freddie Mac credit requirement and view credit risk. Click on this, you will reach here. You will have, login IDs for this. You can log in into it and yeah, just click here and you will get the entire application. Same username and address, right? Once you will have user ID and password, you can sign in. Now, what I'm trying to tell, so LOS system, let's say it's Encompass or any system where I have, so back in 2003-4, we were punching all the data in this system. Then we were going to the website or link to DU or LP, whatever I need to run. Let's say I opened DU website and then I was copy pasting all the data here. And I remember we were, we were trying to type everything in the DU findings and there were a lot of mistakes happening. Sometimes we were missing spelling, sometimes we were, missing the numbers, like asset are 3000, I wrote 300 and ran the DU finding. So what we were doing, our managers were telling, don't type anything, just copy paste. But there were few fields which we were not able to copy paste, right? So we had to type. And then before submitting, someone was coming and they were checking all our findings and then, okay, you are good, you can run the DU, right? So we were punching everything manually, like all the borrower name, co-borrower name, their addresses, everything we were punching, we were copy pasting in this application. Now all the data we have supplied in this website. Now there was a submit button. We were submitting, we hit the submit button. And within half an hour, sometimes next day, we were receiving the record. Those are called findings, right? Those are called findings, DU findings, LP findings. Let me show you how it looks like. Any question, anyone? If getting confused, please don't remain confused. Let me know and we can discuss. See, this is how it looks like, right? These are findings. Desktop underwriting findings. These are loan product advisor findings. So these are the findings records that we get, like eligible, accept, right? Here, approve, eligible, your loan is approved, eligible. All this data, we supplied it. And then it scrutinized all the data, and then it is going to give us different information that we should do this, we should do that. That when we will go through these findings, we will read it and will understand, right? So these findings will come to us. We used to call them AUS findings, means automated underwriting ka findings, right? Means records. So these findings we were receiving. Then what happened eventually, as the software, this technology improved by 2006-7, or I think 2007-8, this website integrated with LOS. Now in these days, we need not to go to website, but we just need to punch all the data in this LOS system, and this submit button also they placed in this system here, right? So submit, there is LP, there is DU, whatever finding I want to submit, I will hit the submit button. All this data will automatically go to the, you must have heard those MISMO files, different, right? Software language, don't we are not going to get into that, but though through those files, I mean this LOS system create a data and automatically electronically send it to the findings, DU findings, and then DU scrutinize the data, and within second it gives this, these AUS findings will get available here in the LOS folder with the name of AUS. In few seconds, I submit, and within few seconds, it's very speed now. It's 5G time, right? So 5th generation is actually very speed. Right? Within second, you will get all your findings in the system. We need not to go to any website. More people who become underwriter after, I think, 2012, 13, 14, they do not even know all this. That how DU or LP website looks like, what happens there, right? I remember those days when we were running all this data and there was error, and we had to go through these websites 10 times. We were not able to find data. Where did we mistake? Where we did the mistake? We were not able to find them. It was but then it is now super easy. Just hit the submit button. Just check your data. Data should be correct. Hit the submit button. Everything will go to that particular website. We do not know where it goes, but within a second, we will get the AUS findings. What AUS finding? Which I shared with you. Did you get the whole concept? What is going on there?
Yes.
Right?
Yes, sure.
So this is called AUS system, or this is how Fannie, Freddie, or any other investor they used to work. Because I told 1200, 1700 pages document for just one product, we cannot go to. So to ease out, that is why these AUS system has been created there, right? AUS is clear, Fannie, Freddie are clear, GSEs are clear, right? Very good. Now, there is one more thing that I wanted to share with you about the GSEs. GSEs means Fannie and Freddie. Fannie Mae and Freddie Mac. These are the two boss dominating investors in the real estate market. These are the two GSEs, government-sponsored enterprise. So anyone, ask you during the interview that, do you know or do you do the GSEs underwriting? You say yes. GSEs underwriting means, do you do the underwriting according to Fannie and Freddie Mac guidelines? You say yes. If they tells you non-GSE, do you know about the non-GSEs guidelines? Non-GSEs investors or non-GSEs loan? You say yes, I know. And if they ask what are non-GSEs, any file that has been underwritten, that has not been underwritten according to Fannie and Freddie guidelines, those are non-GSE guidelines. Those are non-GSE files, or those are non-GSE loans. GSE loans are those loans which will be underwritten, approved according to Fannie and Freddie guideline. Any loan which does not meet all the guidelines of Fannie and Freddie, those are called non-GSE guidelines, non-GSE loans. Clear? It's very important question. Yes.
Ginnie Mae is also GSE, or we don't
Yeah,
consider
that is also GSE. That also comes under GSE, but that only does the uh,
government loans.
government loans. So private lenders cannot do government loans, right?
Okay, got it.
Yeah, but these Fannie and Freddie, they can do the government loans. Okay.
Sure.
So non-GSEs means whoever is not following any loan approved according to GSE's guideline, means Fannie and Freddie guideline. Those are GSE loans. Those are confirming loans. Have you heard this confirming term? Confirming. Now remember, any loan that confirms all the guidelines of Fannie and Freddie, those are called confirming loan. It's very confusing for people, right? GSE loans, non-GSE loans. These are confirming loans, non-confirming loans. So remember, confirming means conform to the Fannie and Freddie guidelines, confirming loans. Non-conforming loans does not conform to Fannie and Freddie guidelines, right? And prime mortgage means prime loans, prime mortgage means confirming loans. Confirming means GSE's loan. Non-conforming or subprime loan. What are subprime loans? Which does not, or whatever the loan does not conform to the Fannie and Freddie Mac guidelines, those are subprime loans. These are prime loans. Prime loans are which conforms all the guidelines of the Freddie and Freddie. Either one. It is not mandatory that they need to conform Fannie and Freddie both. No. Even if they conform according to Freddie guidelines, right, they are prime loans. Any loan which can be sold to Fannie and Freddie, those are prime loans, confirming loans, GSE's loan, right? Any loan which could not be sold to Fannie or Freddie because they do not conform all the guidelines of Fannie and Freddie, those are non-GSE loans, non-QM loans. You must have heard, because no one is trying to state now subprime loans. They used to call non-QM loan, non-conforming loan. Are we clear with these terms? Non-conforming, conforming, what is subprime, prime, conforming, GSEs, Fannie Mae, Freddie Mac?
So non-conforming, subprime, and non-QM, all three are synonyms, right?
Yes, these are non-GSE loans.
Okay, got it.
Okay. Non-QM. There are QM loan as well, qualified mortgage. That is prime. Qualified, QM, qualified mortgage. Qualified mortgage. Qualified mortgage is actually the new name for prime mortgage, and non-qualified mortgage is a new name for subprime. Because when the market fall down on 2007-8, that time it was based on the subprime mortgage, right? So after that, everyone who got bankrupt, they do not want to use or even listen to the subprime loan name. So they have changed it to non-qualified. There are certain new guidelines, those have been implemented in the non-qualified. So they are telling those are non-qualified, the Fannie and Freddie. Very simple.
Yes.
There are 2-3 steps. There are 2-3 steps which we will discuss later when we will be going through the underwriting, right? AUS. That time I will show you how it could be done in the system, right? But as of now, overview, and there are two buttons that need to be hit. If you want to run the LP findings, you hit the LP button. If you want to run the DU, you hit the DU findings button. As soon as you hit the submit button for DU, within a second, those findings will get uploaded to your system in your document folder. As soon as you run the LP, Similar, within a second, your LP findings will get uploaded to your LOS system and
Yes.
you will get a notification, right? DU or LP ran successfully, and then you can open these findings and review. Done?
Right. That,
Okay.
yeah. So all the information which we are putting in our application, so LPA or DU will be collect that information only, and they will show us that what is the borrower income, credit history, or another information.
Everything, yes, everything, right? Whatever
Yeah.
the
Okay.
whatever we are going to run, the information, right? Whatever we are going to add in our LOS system, once we run these findings, this is how the findings will reach to us. Desktop and okay, so these findings will come to us, right? Okay, now, so that is what the AUS findings, GSEs, Fannie Mae, Freddie Mac, conforming, non-conforming loans, right? Let's come back to where we were on the loan application, right? So once loan application is ran, is updated, after that, what is going to happen? Once, now, I mean, I'm coming back to our topic. This was not, something that we are going to integrate this now, right? So where we were at the application, right? That loan application is sent to any of the processor to AE. AE is going to move that loan application to processor, and processor is going to create a loan file, means a unique number. Everything will be punched together here, and then what need to be done? Then need to be submit. What need to be submit? AUS. Now AUS could be LP or DU, or most of the time, most of the lender, they wanted to run both findings because they wanted to see. Sometimes AUS might not approve the loan, but LP approve the loan. Sometimes DU approve the loan, LP doesn't approve the loan. Sometimes both approve the loan. If both approve the loan, lender will have two options, right? He can sell the loan to LP, he can sell to DU. Whoever going to purchase it first, they can sell it to. So having two investors on the list is good or bad? Is good, right?
Yes.
So most of the lenders, they will at this stage, they are going to run the LP or D. But here is one more twist, right? If anyone, let's say processor is going to run, sorry, my hands are sweating now, so the pen is not working properly, okay? So if anyone is going to submit the AUS, right? The decision which we are going to get in this finding, is that based on data, authentic data? No, right? Because all the information that we gathered on the loan application, that was verbal information. We didn't authenticated anything. Borrower told us, this is my SSN, this is my name, this is my address, this much of loan amount I am required, this is my income, 10,000, these are my total debts. So everything, all this information gathered verbally, right? We didn't ask for any document. The only document that we collected, if it was intent to proceed, and few other documents, disclosures, right? Those we collected. Then we run the credit report. Do you know what is credit report? In India, we have civil report. There we used to run the credit report, right? We will go through credit report again. As of now, I'm just going to give you an overview of credit report. So what happened? The credit report is like there are three different bureaus in US: Equifax, Experian, and TransUnion. What they used to do? They used to collate all the financial activities of every person. Now, how they will get to know the every person? Because every US citizen are given or provided with unique identity that is called SSN number. Like in India, we have been also given a unique identity. Those are called Aadhaar number, right? Aadhaar card. Similarly, in the US, they have been provided with SSN number, right? So if you go to a market and purchase and pay in cash, that is not called financial transaction. Nobody will know. But as soon as you are going to finance, you are going to take a loan against that. You are telling, someone, right, that I will pay you 20% and 80% in next 10 installment. So next 10 installment, you are obviously the person who is going to give you that credit. They will ask you the information, right? And will put it against you that you have taken this much of loan. As soon as like they might get your SSN card, the address, your information, your name, everything will be collected from you. Then all this financial data is being reported to these bureaus, Equifax, Experian, and TransUnion. They used to collect it, all the data, right? And whenever we need to, let's say you come back to me and ask for more credit, that you need $1,000 loan, right? What I do not know whether you will be able to give that loan back to me, or do you have that much of capacity? Means how many loans you are currently already paying. If I know you are making $1,000 per month and you are paying back $1,200 installments in each month, should I give you the loan? Never, right? I won't give you. You won't be able to pay back to me. But when I come to know you making $10,000 and you are only paying 3 loans, those are 300. I know you have sufficient amount remaining behind, that is 700. So I will obviously give you 300 as a credit, and I will ask you pay $100 each month. To get all this information about your loans, how much loans going on, whether you pay everything on time, all the installment on time, that credit report is required, right? So we won't run these AUS findings without this credit report. So whatever the information you have submitted to us on the loan application, with this loan application, we will get your approval or authorization to run your credit report. And I cannot run your credit report on free. So there will be some amount that need to be paid. So authorization for credit report or credit authorization, borrower authorization. There are different names for this disclosure. So this authorization, once you sign this disclosure, we will get your credit card information, and with the help of that credit card information, we are going to run your credit report. Means we are going to download your credit report from, there are so many websites from where we can download the credit report. So as a loan officer or as a processor, I'm going to download your credit report. From that credit report, I'm going to add all your liabilities. Once I add all your expenses here, according to this credit report, all other data you submitted to me on the loan application, now I'm good to submit the AUS findings. Then I submit the AUS finding and it gave me approved. It approved the loan. Will I be able to give you a loan? No. Because as of now, I just checked whatever your assumption is. Means you are assuming I will get 100,000 loan. My 10,000 is my expenses. I have 20,000 in my bank. So all this information you have given me verbally, but I haven't authenticated it. I didn't verify anything. But whatever your desire is, I wanted to check that whether you will be able to go for that loan or not. You told me I'm going to buy 350,000 property. Now I'm making $10,000 per month. My total expenses on credit report, you can see that it's only $1,000. Now tell me how much loan amount I can get approved for. So now on the basis of this, I applied everything and then I put loan amount to 50,000 and ran the submit. It gave me ineligible because LTV or loan to value is high. Then I came back, I made it 200,000. It gave me approved. Now I know you are good to go for 200,000 loan amount. Rest of the amount you need to pay from the pocket. That is called down payment. Right? So here what I'm doing, I'm not approving loan. I'm checking your eligibility. how much loan you can go for. Does that make sense? It is called, this entire process that we have discussed, it is called pre-qualification. Pre-qualification. In some lender, it called soft submission. Soft submission because we didn't collected any document other than credit report. All the soft submission, whatever the document you have sent to us, right? That is only 1003. We ran your credit report, and based on these two documents, I checked your loan qualification, whether you qualify for a loan or not. If I know that you do not qualify for loan, why should I ask you to submit all your documents? I cannot ask. So first I will do a pre-qualification. It is also called AUS, a different name, lender to lender, okay? But basically it is a pre-qualification check for your loan amount or for your loan. This is called pre-qualification. If it approves, what I need to do? I will tell the borrower, will send this AUS pre-qualification letter, right? And tell borrower that you are good to go for loan. Right now, it is a pre-qualification, but now send us these many documents. So a list of document will also be shared with the borrower with this letter, approval letter, initial approval letter. We will send the list of document accordingly, whatever the data, whatever the information he gave us, or borrower, she or he, they gave us on the loan application. Now it's time to authenticate that data. So we will send the list accordingly. If someone told I'm doing myself, I'm a self-employed borrower, I will tell him, okay, according to self-employed, send me your tax return for last 2 years. If someone tell he's a wage earner, salaried person, I will ask, okay, send me your most recent pay stub, your W2, right? Accordingly, if someone is telling retired, so I will ask him, send me your 1099-R and for last 2 years, and also send me 2-month bank statement to see if you are currently receiving it. Accordingly, I'm going to make a list of document and going to ask for the borrower to send this document. As soon as I send this pre-qualification letter and the list of document, whatever I require, my origination work comes to an end and loan gets, once they are going to upload a document, means as a originator, our work is done here. Now the file moves to next section, and that is called processing. So now this is how our origination comes to an end, right? The entire work in origination comes to an end. Now what we are, life of the loan starts with origination, then goes to processing, then goes to underwriting, then goes to closing, then goes to funding, then goes to servicing, right? Then goes to shipping, then goes to warehousing, then goes to secondary market, and then again go to origination. So this is called mortgage cycle. Origination, processing, underwriting, closing, funding, servicing, shipping, and warehousing, and secondary market, right? This is called mortgage cycle. If it is not clear, you must have received that presentation, right? Regarding the document, regarding the basics. One presentation.
Yes.
Yes, sir.
There you will find the entire mortgage cycle. Okay. So we are going to cover this. What we covered the origination part. Now we are going to cover I'm going to move to the processing in the next class.